Over the course of the next couple of minutes, I'd just like to explain how the 5% tax deferred withdrawal allowance works, where somebody has taken out an investment bond and then added an additional premium to that bond. The best way to explain this is by way of an example. So for example, if an individual put £100,000 into a bond, the 5% withdrawal allowance would be based on that 100,000. So they would essentially be able to take £5,000 out of the bond each year for up to 20 years. Let's say then that in year 4 they added an additional premium of £50,000 into that policy. The 5% withdrawal allowance at this point would then increase to £7,500, and that would be based on the £5,000 of the initial premium amount of £100,000 and £2,500 on the additional premium of £50,000. The point to bear in mind, however, with the 5% withdrawal allowance is you have to go 20 years from the start of the policy. So in my particular example, you would be going from year 1 for 20 years based on 5% of the 100,000, and then in year 4, when the additional premium has been paid, even though the 5% withdrawal allowance increases to 7,500, you would only be able to take 7,500 for up to the next 16 years. And then from year 16 to 20, the 5% withdrawal allowance would then drop to 2,500 based on the additional increment of 50,000, which was paid into the policy in year 4. With regards to calculating the chargeable event gain on full surrender of the policy, you'll be pleased to note that you still follow the same rules, i.e. you still need to look at the amount that the whole policy pays out on encashment, plus any capital withdrawals that have been taken, less the total amount invested. So in my case, that would be 150,000, because we said that the policy was initially set up with 100,000 and then an additional premium was made in year 4 of 50,000. So the investment amount would be 150,000. And if there had been any chargeable excesses, then of course you would take them into account at that point of the calculation. I hope that's been useful, but we have got lots of information available under the UK Life Policy Taxation section on TechLink.